Okay, guys, good morning from here. It's actually midnight. So, as promised, I've been busy, but I have to drop this one. So, is a breakdown analysis on VIX 75 1S trade right here. This is the point of interest shared also with members in the mentorship on the month of March, I think so. And we got triggered right there. So we're going to get into it right now. Where is this Copilot from? All right. So we head into our NT5. All right. So now we go to look for VIX75 1S, and this is it right here. And that is it. He's still riding, and I think I left early. Tesla EOS. Okay, so I don't know, I can't find it. Alright, I think this is it. So this is it right here, the entry. And right here, the trade. Okay, so let's dive into MT5 and analyze VIX 50 run errors. Okay. Let's go. So the first thing to do is we always analyze looking out from our higher time frame so that we can know the overall trend and bias to how we can actually get to look for an entry to trade. Now if you look very closely and very well on VIX75 1S, you can see that we've been on a strong bearish trend, right? So that gave me the idea that I'll likely be looking for a bearish entry, and the idea of the bearish entry comes from what we're seeing right here. So the first thing that I'm going to show you now is the swing low. So change the color of that to black. Sorry, my eyes hot. All right, so we have that swing low point, and from that low we traded higher to give us a swing high right there. All right, so what year was that? That was 2022, right? So we still trade lower. This is 2023, and I know most of us might look this as an older block, an area of demand, right? So after that we finally have a swing low right there. Now this tells me that I have a range in which I'll be dealing with, right? So the range that we're dealing with is this high and this low. So with that I can now take my Fibonacci to mark out the equilibrium, the premium, and the discount price. So right here we see the price traded into an area of equilibrium, and we spike up into this 1.8 Fibonacci level, which is similar to me looking at an equilibrium. So after that liquidity grab, we already know that this price is bearish, right? So now after that we have this swing high right here. Now if I would have been expecting to go bullish, I would have seen the higher time frame break a high, possibly this high. Then I'll be paying attention to look for a bullish market or a bullish entry. But since we have this right here and this high protected, and I'll be expecting to see the price go lower together with the confluence that we have in sell side liquidity pool resting on this low. Now after seeing all of this, we also do need to start running down to lower time frame and refine our trades. So now this is it on the weekly time frame, and this is the range that we are, right? Now on the weekly time frame we have something interesting printed, and very interesting, that we have this higher low, right? Now after the pricing possibly trades higher to wipe out buy stop resting at this high. Now after taking out the buy stop, we still traded lower into this order block right here, also a demand zone, you can call it, and the one you is your choice. Okay, so we tap into the demand zone and we traded higher and we swept a high. Now I get to tell some people that meet me to ask me questions that we do not confirm a stop hunt, right? Like when we are doing this smart money concept schematic where we talked about stop hunt plus a breaking market structure plus a return to order block, we don't just identify a stop hunt anyhow when we have a sweep on a high. Just like this one, you will call it a stop hunt, right? Yeah, it's a liquidity grab, but I will not use this smart money setup that because I saw a stop hunt right here, I will immediately start looking for sales. All right. So a smart money setup when it comes to stop hunt should be a stop hunt plus a structural break. So when that structural break is confirmed, I can now look up and say, all right, this is a confirmed setup referring to stop hunt plus a structural break. Right. So when the structural break occurs, we are expecting to look for price to put backwards to tap into the point of interest, which is at the premium price. The candlestick, they're responsible to wipe and sweep the liquidity from the previous high. Now, after we tap into the order block again, we change the character and we finally have a breaking market structure. So we have a clean sweep setup referring to structural break. Okay, so that tells me that my POI will be right here. So most of you asking me the reason why I only trade higher time frame, because the higher time frame gives me the overall structural trend and bias, and I'm a type of person that I would not like to see a disturbance in trades, like price tap my point of interest, it now comes back to my point of interest and start manipulating around that area. I don't like seeing that. It emotionally it affects me, so I just like to see tap and run, and I don't have to get worried of what is happening. So the higher time frame is where the institution based on, and based on the idea that the higher time frame is the leader to whatever we see in the lower time frame. So the lower time frame follows whatever the higher time frame prints for us. All right, so we have to wait for the lower time frame to realign with that of the higher time frame. All right, so now back to this. We have this high given to us, and we label that high as an area of inducement and a smart money trap. Now it is referred to as smart money trap because this right here looks like an order block, and some smart money traders will be anticipating to look for sales at that point of interest, saying that this is a breaker structure. Now there's another thing that I would like you guys to understand when it comes to market structure, and that is when we're having a bullish structure. We have this high. Let me just go to trading view. Okay, all right, so let us say that we have this high, we have this low, we have this high, we have this low, we have this high. Now price tapped into an area of demand, and we are expected to buy the market, but it failed, right? And then we finally have this structural break, and after the structural break we see something that trades back higher, then price does something like this. Now most traders we say, okay, we have a breaker structure right here, so since they refer this as a breaker structure, they are expected to start selling from this point of interest. Whereas price, when it gets there, what you do is it sweeps them onto the stop loss and tap the one above. All right, so the question is, why is that? Now the reason why such thing happened and why this is a smart money trap is due to the fact that this high at which you are trying to sell from is not the origin of what shifted a bullish market to a bearish market. To make it clear for you, let's look at the chart, and we now use the annotations for bullish and bearish market. Right, so let's go. We have this high, we have this low, which is higher high, higher low, higher high, higher low, higher high, higher low, high, low. When this low was created, this is a higher low, right? So we break that higher low and we have a change of character, and then we now have a break in market structure. Two structural break confirms me that I am expected to sell, and not just only one, because when we do a change of character, possibly the price is still in that demand zone and it goes higher. So we want to see it violate that, giving us a PMS break market structure for me to confirm a bearish trend. Now, what is the reason why I have to expect that? The reason is because when I have this is a high, not lower high. Okay, this is a high, not lower high, and this is a low, not lower low. Okay, because we have higher high, higher low, higher high, higher low, high, low. So the expectation, since I have violated a bullish market, I want price to retrace backwards to the area that were responsible to break a bullish trend and change it to a bearish trend. So that is the high, that is the low, and I'm expecting a lower high to come to that price. I repeat, the reason why my interest is here and not here is because price was bullish, we have a failed high, and this high was responsible to shift this bullish trend to a bearish trend by changing character and then breaking another bullish structure. This one, the smart money trap, is not the structure that shifted a bullish trend to a bearish trend. It only did a break or structure, did not change character, did not break market structure, but break or structure. This did not break a bullish trend, so it's referred to as a smart money setup. Sorry, a smart money trap. So we have to be trading into the lower high that were responsible to shift this bullish trend to a bearish trend by changing its character. Another reference to what I'm explaining, if you go to Euro USD, remember I predicted a bearish market on Euro USD, and if you pay attention, where I wanted to sell that I posted on YouTube also was right here, right? But price sweat my liquidity and tapped to the one I showed you guys on YouTube that we ignored during the month of March, because March traded into a favorable gap and sold off. We took that sell and we ignored this. Price retraced back to that supply zone, taking my liquidity right here. Now, why is that so? You will say this is a regular structure, right? So that is the mistake I did. But then if you pay attention to this, right, this is a structure now, low, high, low, high. We tapped into a daily order block right here. We created the high, we created the low, right? Now this is where we had a change of character. This is the high that was responsible to change a bullish trend to a bearish trend, and also taking an external low. If you go over to the daily time frame, you also see that. So this is a range high, this is a range low. We break that external low, and what is the origin of that? This order block right here. So we violated a bullish order block, so we have a change of character and the break of market structure. This right here is a smart money trap to induce us into the market. So price gets there and still build up a resistance, has a basal liquidity pool to tap where the supply zone, the origin of what shifted a bullish trend to a bearish trend. That is it. I hope you got that. So let's go back to VIX75 1S. So that's what we saw right here. So we have the change of character and the breaking market structure. The origin is right here. This is my money tab. All right. So now that's what I shared, and that was on the month of March. Now price starts to consolidate and still traded higher to build what the Barca liquidity pool. So we have a pool of liquidity right here. So remember what I explained about stop loss. Stop loss at an area of resistance pending by others. So that is why it is called Barca liquidity pool, because retail traders will be selling from an area of resistance. Their stop loss above right here. So the stop loss above an area of resistance is a buy order, which is explained as retail traders buying back what they were selling when the price gets expensive. But since they are buying it higher than the price at which you are selling it, they have loss. Okay, including someone who places a pending buy stop order is expected to buy the price, but then price gets violated, hit a stop loss, and they're like they want to buy it back, but they're buying loss and price still selling. All right. Okay. So since we have this Barca liquidity building up right here, we already know that this is valid, because that is where this smart money we want to get into the market to sell to those who are wanting to buy from here. The stop loss are by orders. So the usual traders, the smart money, are willing to sell to those who are willing to buy. So it's like saying, where you want to sell an asset, you're looking for a buyer. Where you want to buy something, you're looking for a seller. So in this case, they wanted to sell and they are looking for buyers. So this liquidity pool is enough to balance the amount of units that they want to sell off. So price tapped into it and we sell. Now if you check this is the first week that tapped into it, then it starts second week sold off. So those in the mentorship know what I meant by that. All right, so right here, this is it, resistance level and price traded after price trade out of the resistance level. We see that it tapped into this order block. Now the order block tried to push the price higher, but it failed, right? And this is the sell side inefficiency. It failed to push the price higher, right? So we could possibly see entry to trade on the forward time frame. We have this, after it tapped, we have this low trading to a favorite gap. It failed, and I was also looking to sell from here, but you know how synthetic is. It wiped its stop loss, so it sold down, and there was no entry seen right here to buy. So you already know what's up, and it explained that it is expected to sell. All right, so that explained. I think I should make one more video on one of the posts I did on Facebook, and that would be, I've done EUSE, which is a stock market, Tesla. This one is what? Step index done. Alright, Tesla. So if you check Tesla, I think Tesla is now $262. So I don't know if any of you bought when I posted it, but few of my mentees purchased it, and you know the target. You're targeting these buy stops and these highs. Okay, so I'll make a separate videos for any other thing right here I find interesting. I have this one also. I have step index, but I'll talk about this one. Before, I don't think I'll talk about buying step index, but let me talk about this one because I love this one. So this one is VIX25 on the daily time frame. VIX25, boom, 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 right there. All right. Please all selected. Okay, so this is VIX25 right here. So this was the area where I was expecting to sell. And if you go to the daily time frame, this is it right here. So let's expand this. And the next thing we're gonna do is Control B, so that we can delete every drawings that we have right here. All right, close. So let's quickly run down to the up to the monthly time frame. So this is the monthly time frame. So the monthly time frame, as you can see, is a strong bearish market, and you can clearly see that right here. We have the swing low right here, and we have the swing high right here. After that, we have the swing low right here. Now when we take a Fibonacci to take the range right there and mark out the equilibrium, boom, we can see that price tapped into the equilibrium again, 61.8 Fibonacci level, and we also have a supply zone right there at that 61.8 Fib level, and the supply zone is right here. So price traded higher, it tapped into that supply zone. Most of us might be thinking this is bullish, but you can actually see that this is bearish, right? So when it tapped, we trade lower, we put back upwards, and you know, most of us could mark higher high, higher low, right? But on the other hand, if you check also, you'll see that this right here built an area of support, liquidity pool. Now we try to pull higher. The expectation is you would like to see it go above this high, but it says no, it will not. So it tells you that, okay, let's see what happens. Now we can now apply the Agrodin range right here, because you can see that the candlesticks are ranging. So you can see this hunt on liquidity high, it trailed over, we hunt this high, it came back, and this was March, this was April, so that is the second quarter. All right, good. So this current month, we see it opened, we trade higher, and when we traded higher, we wiped out previous month high. Going down to the weekly time frame, we wiped out previous week high, and not just only previous week high, but also an internal liquidity, a short term high, right? So after that, going down to the data frame, one of my mentee also took this trade, but he took his own sell from this point. Though I'm not active on this because I also expected to see a buy right here. Yeah, but like it is, the higher time frame always controls everything. So now, while I elaborate on Facebook, if you pay attention to this, I cannot open it. All right. If you pay attention to this, I elaborate Monday's open price. Now, this Monday's open price is the opening price of the first week of this month, and we trade higher. So it's like the market opens, it trades higher to give you the highest price that it trades for that week, and then we go lower below the opening price. So it's like predicting the weekly candle. Yeah, I will talk about candle theory later on, but let's keep talking about this. So the Monday's opening price is right here, and if you pay attention to this daily time frame, you can see, yes, you can say that you have high, low, high, low, high, but then me on the other hand, you can see also that This right here is an area of support. We have liquidity pool. We traded lower. We have liquidity pool also trading into this order block. We traded higher. Now it did not break structure. What it did was purge. Now a purge is when the price starts consolidating around a range high. Not only that, we also hunted this high, right? So let's just quickly run down to the 4 hour time frame. Now this is the 4 hour time frame, and we can see how it's changed direction after it took out that high, right? So also hunted this high right here, then it changed its direction. So after hunting what previous week high and previous month high, now after that, what do you think the target would be? Sell stop right here, and we hit it. Boom. Also, it also has liquidity pool. Now a little buy order was taken from here also, because if you check the 12 hour time frame, you think this is an order block. So bought into that high right there. Now talking about taking another sell, if you check the 6 hour time frame, you'll see that you have inefficiency, right? Structural break after taking hunt on this high, and then a clean 6 hour order block, which also has a fair value gap. So this is a sweet setup to take due to that inefficiency, the gap right there, and the structural shift that we have right there, right? So price trades into it and quickly dropped. So we can possibly just swing this, and if you want to target, we'll take a previous week low. Then we're already taking that previous week low, and the next thing to just target is previous month low right there, and this sell stop resting below right here for swing trades. Okay, so so that it needs to go sweep this liquidity right there, and we still have this sell stop. So this trade is a perfect one. So I think I need to go and rest and sleep. Then think about how I could help you guys by providing quality education in trading to give you a clear understanding of how you can analyze the market and could possibly predict the market when it comes to you trying to look for assets to invest into. So you won't make mistake when it comes to analysis. So like a way of building you up to analyze the market perfectly, and then you patiently wait for the market to give you what you want to see. So yeah, so that is it, guys. So take care and be safe. You can get the course on algorithm prediction on Udemy. You see it on the description link. So take care and be safe.